Welcome to the DevReady Podcast, where we're helping non-techs build better tech. Today we have Paul Lange joining us, 30-year veteran in the private equity space, built several businesses, exited some so not so successful as well, Paul, that I'm sure we'll get into a little bit today, but been involved in a number of different areas in terms of growth strategy, how to build a business to exit. And today we wanted to talk to Paul about setting up your business from the get-go from an exit perspective. So, or what that might mean, or is it from an investment perspective? So, Paul, thanks for joining us, and thanks for coming on the DevReady Podcast.
Thanks very much for having me. Pleasure to be here.
I really appreciate it. So, let's just explore a little bit about who Paul is and what your background is and how you stumbled into private equity investment in that industry. And yeah, what's a bit about your background history?
I did actually almost pretty much stumble into private equity. I had two jobs in my life, and I used to say that I've been unemployable for 30 years, but then my wife pointed out if I keep saying that, then people won't hire me for anything. So the reality is after those two jobs, though, I've been either building and scaling and exiting businesses of my own or helping other people do the same. And as you mentioned, there have been quite a number which really shouldn't have found their way off the back of a napkin, let alone ever be registered.
I think we've all been there in some capacity, but yeah.
Yeah, we call that the entrepreneurial R&D, So
yes.
It's just we just don't get a government grant for it. So my first two jobs were my first and only two jobs were in hospitality, and the second one was I went into this hospitality venue and they were doing 500 Deutschmark a day at the bar, and I converted that in 2.5 years to 15,000 Deutschmark a day. So I had a bit of
That's a touch of an increase there.
It was, wasn't it? This is mid to late 80s. So people sort of like, okay, you got a bit of a talent. And during that, I started my first business, which was also in hospitality. It was a cocktail party service. And I had, without really realizing it in the beginning, I had a bit of a mentor, and he was the founder of a German investment bank. And one day he said to me, Paul, you should come and work with me. I'm like, Hans, I got no clue what you do apart from work with money. And what would I do? He says, don't worry, I'll teach you. And I said, well, I got this other little business over here that you've been helping me with. And he says, don't worry, I'll help you with that. And he said, yeah, because you'll need your money to come into this, because he wanted to start a new boutique private equity venture capital firm with him and 5 of his buddies, a whole bunch of high net worth. So that's how I stumbled into PE and VC. That was interesting. 30 years ago.
Through your mentor in that space, and then did he basically get you to buy into that, or what was the process there?
Yeah, well, when he said, listen, I'll help you sell it, he's actually said, listen, you're going to need money to come in as a full partner. I want you to come as a full partner. I'm a mid-20 Aussie in Germany at the time. And I'm like, well, how much do I need? And he's like, you're going to need at least 12 million Deutschmark.
It's a small amount of money.
After I stopped laughing hilariously, he's like, don't worry, I'll help you. So he taught me how to do a management buyout, which is what we did with the business. And indeed, we got that plus more. So I was able to go away and have a bit of a holiday and go whoopee prior to starting the new gig. And so I became a full partner in that business. And we did
a multi-million-dollar business in that first instance, really, basically.
Yeah, I mean, we were capitalized. You can imagine 6 guys putting 12 million. We were capitalized at 72 mil. Yeah. Deutschmark. Okay, convert that to US dollars. It was around about 40 mil US at the time. So that wasn't too bad for a little boutique firm back in the late 80s, right?
Yeah. Mm-hmm. Clearly not in the late 80s.
Yeah, it's a lot of money back then.
And, starting off that way. It was, and these guys, they've been around perhaps for a long time. Plus, they also introduced me to their relationships of high net worths and ultra high net worths who I've then maintained over the many years.
Okay.
And when we exited that firm, see, one of the things I did in that business is I would work with the companies that we buy to help them grow and scale, work with the management team. And when we exited that business, some of the high net worths came to me and said, Paul, listen, would you like to go and keep doing for us what you used to do for all of us when, you had that business? Mm-hmm. I'm like, yeah, sure. Why not? So that's just growing. And these days, ironically, I deal mostly with the children or grandchildren of those contacts, because some of them already passed on and the rest of them are just enjoying life.
Oh, wow.
Yep.
It has been 30 years. It's been a nice career that you established there. And I imagine, they would have been at mid-20s, were you, when that happened? Late 20s, you said?
Yeah, I was mid-20s and they were like mid-50s to mid-60s. So you can imagine some of them are passed on, and the rest are probably in lockdown somewhere right now.
What did that experience teach you? Because that would have been walking into some high net worth, obviously, but also people that have been around for quite a while in business and in industry.
Lots of experience there.
What was that experience like?
It was, in the first instance, it was very surreal because I'd come from, I graduated Australian in high school, got my HSC, got declined by the Australian Air Force because of my eyesight, so I couldn't fly fighters.
Okay. Too pilot.
Yeah, I wanted to be a pilot. They offered me transport, and I'm like, you've got to be joking. I'm not going to fly C-130s. I wanted Top Gun, Give me the F-111s, which was at the time, right?
That's the real stuff, right?
That recruitment video.
And then I head off to Germany, and I head off, and I get involved in hospitality, and I get involved in the high-end hospitality. So I'm getting used to this money life, but I was not. I was absolutely not prepared for what I saw. Nor even through having the first business was I prepared for understanding how business. These guys obviously had, decades of experience in buying businesses and running and all the rest. And so they laid it all out for me. They firstly taught me about about business structures. They taught me about how to not just in terms of operationally, but how to structure a business from the start. They quite frankly, all the stuff that we hear these days from some of the most inspirational speakers about business, these guys were saying back in the 80s based on how they were doing stuff. So they were talking about hiring on values. They were talking about setting things up with a purpose. They were talking about understanding that, before you get into something, you've got to have your exits planned out. And this is to understand the context.
So well ahead of their time, basically.
Oh, very much so, especially because you have to remember they were generational money, very old generational money, which you wouldn't expect to be talking that way.
Correct.
Or I didn't anyway. So it was I literally fell upstairs by being given this opportunity. And I'm very grateful I was. So I went from being someone who had this little business to someone who had clearly a business that was bigger than I thought. So I was able to exit to move into another business where I was now suddenly responsible for analyzing the opportunities that were being presented to this multi-million-dollar fund and then making choices to putting recommendations to the whole board about where we should or shouldn't be putting our money. And then they would then take what I recommended and they dissect it. In the beginning, it was quite painful because
dissection would have been a fun time.
I tell you, here's me thinking, you get these delusions of grandeur sort of thing. You're a young bloke. You got a picture. You're a young bloke, mid-20s. You suddenly got all this money and suddenly you're in this position like, wow, and your head swells. Mine did. I'll be honest.
Oh, anyone in that position would. Especially being, that sort of buyer and then being brought into a situation like that. I imagine it'll be very difficult not to swell in that situation.
You suddenly think that you get this idea that you're better than you are. But they had a very nice way of, bringing me back down to earth. Yeah.
Okay. I like it.
In a very educational way, because their intent, they didn't bring me in there they brought me in there to be part of it. So they didn't want to have me decimated. I learned how to. Yeah, exactly. Right. And so over the years of us doing that, and then and subsequent years when I was helping other companies and other investors, there was this framework we used for evaluating whether a business would be something we get into or not. And quite frankly, it's the same framework that every business owner should use, in my opinion, I don't like using that word too often, but really should use to assess where they are and where they're going, And one thing I need to point out as well, unlike a lot of VCs and PE companies out there, these guys, if they like something, they'll go and they'll introduce themselves and they'll say, hey, we're interested, put together a deck and let's have a chat. They're not like a lot of other people who are open to receiving pitch decks all the time. In other words, they don't go looking for it. If they're interested in it, they'll find it. So because
they're actually physically hunting on industries and businesses out there and people probably, because you mentioned something around hiring on value. So I imagine they care about the people too.
Absolutely. Yeah. So they've got their ear to the ground and talking to their connections all the time to understand what's happening in particular markets when they go in and out of different markets. So like we don't all eat in the Chinese or the Greek or the Italian restaurant every night. Mm-hmm. So just in the same way, they diversify their investments. They don't really, let me rephrase that. They rarely invest in something that has come as a pitch from out of nowhere. Their investments, I would say over 99% of them, the ones I've seen, they've said, hey, we like this, let's investigate, and then they'll put their time and effort into it. And there's a message in there because most people I talk to who want funding and this is me as a 30-year PE guy, right? I tell most people, how about you try selling your way out of your funding issues? How about How about you actually go and...
It's a great way to look at it. Yes. Bootstrap it, right? Do it yourself.
Go and demonstrate that you can actually sell what you say you're going to sell. And to be honest, the tech bubble of the 90s has a lot to answer for in that.
Yes.
People, and it still goes on today.
There's a new bubble in that tech space these days, all that crypto space, but it's another story.
Oh yeah, big time. We'll see where that one goes.
You've got valuations on company, multi-billion-dollar valuations and multi-million. You're thinking, what are they doing? How do they have this value? It's all spec, the whole thing.
It is, and when that and quantitative easing blow up in our faces, then there'll be some winners and there'll be some losers. There always are.
It always is, yes.
I guess my point there is this: that a lot of the time, if you do the things that you need to do to be attractive to an investor, you'll have a successful business, and then bringing investment on board will put you in a stronger position than if you go after investment really when you are in that bootstrapping, shoestring sort of state. Because you're going to be
no position of power there either, is there? So you've got no leverage when you haven't proven or even delivered anything. So I think, and you mentioned around hiring, then I think I'm just still going back to that hiring on value, but also hiring on results or investing on results is a lot easier for people to put their money towards, isn't it?
Absolutely, and especially these days, right? In the current climate, there is just so much out there. It's the market is just saturated with possibilities. It doesn't matter which industry you're in. I was talking to a mate of mine in the hospitality industry in Australia. Mm-hmm. He's like, I have 200 top Sydney footprints you could walk into tomorrow, fully equipped, and just start up, no money down, right? You wouldn't have to put a penny into it. But who would do that in this climate? Right?
Yeah, I know. Yeah, the climate is not very good for that, but still that tells you why that opportunity exists as well.
Yeah. Correct. So anyway, I was just saying, we have this framework, and it's three primary categories. The first is around minimizing risk. Second is about taking money, and the third is about making it happen. And so the first is really about money, about reward, about purpose, about all those things. I'll dive into these really a bit deeper in a second. The second one is all about the mechanisms, and the third one is all about people. So let's maybe start with minimizing my risk. And this is again,
let's dig into that.
Yeah, this is again how the PE investors I've worked with and how we worked look at it. And I suggest to any business owner out there, if you look at it from the same perspective, you'll be very well positioned to build a very successful business and attract investment at the time when it's
looking forward to digging in on this, because clearly there's a lot of experience and big money investment behind this strategy. So let's dig in. So minimizing risk.
So cool. So the first one is the same radio station everyone tunes into, WIIFM, What's in it for me? And although that sounds terribly,
I love it.
That sounds terribly material, and it can be to a degree because, what's in it for me, how much money is going to be, and all the rest of it. But just remember that it doesn't always have to be a monetary thing. It can be purpose, it can be values, it can be satisfaction, it could be fulfillment, it could be a whole bunch of things. And whether you're talking to an investor or you're thinking about your business yourself, what is really in your business for you? And money is really the last thing. And I know a lot of people say that, and a lot of other people raise their eyebrows and say, that's really cliche. It's not. Money will follow if you're doing something which the world needs, which you have a talent for and which you love doing. That's a pretty cool formula.
Yeah, I agree with that, because we sometimes find ourselves, I know that when I look at opportunities and I see count dollar signs, it generally doesn't work out too well. But when I look at how am I helping, what the value we're getting out of it, and am I actually enjoying what I'm doing, then it's a different conversation because the money comes.
And then there's a different passion that comes through that, and people see that.
Correct.
When they approach you and talk to you about whatever it is that you're trying to do.
Mm-hmm. Absolutely. So the what's in it for me is as much about the financial side of it as it is about the why and the purpose and that sort of thing. So as a business owner, what really gets you out of bed every morning? Why do you get up? Why do you get up? The next one is within minimizing risk is where's the exit? That's one of the first questions we always asked ourselves, when we bought into a business or invest in a business, how are we going to get out of this? And our strategy was, there'll be maybe a couple of exceptions, but I'll say all of the time was we would grow the business through expansion, through acquiring other complementary assets, other complementary businesses. So it was always a case of, okay, we're going to buy this one, we're going to grow it, systemize it, and we're going to buy other things pretty quickly to plug into it. And then we're going to offer it up to the market as a different entity. So businesses these days aren't, we have the approach anyway. Business is not built to last. Business is built to synergize, and everybody will reach their own glass ceiling. And there's someone on the other side of that glass ceiling who can take what you've done and take it to a whole new level. So think about where your exit's going to be, and how, and not just, oh yeah, we'll go IPO or someone will buy it. Yeah, really. I mean, seriously, that's as far as you're going to think. I mean, the next person who says to me that we're going to, it's like, I need to read more. What am I going to do? Oh, I think I'll pick up a book or a Kindle. Seriously. I mean, if that's as far as you're thinking, sit down, think some more. An exit strategy is like dating. Yeah.
Okay.
It's sort
of
like
by that. So you obviously know who you're selling to from the beginning, or who might buy the business itself.
Well, when you start dating, you don't, if you say, oh, listen, I want to get married sometime. Maybe you do, maybe you don't. I don't, I'm married 19 years, but I don't think marriage is a necessary institution these days. Nonetheless, if you wanted to get married or you want to have a partner for a long time, you don't start out dating on the principle that the person you meet is going to be your walking down the aisle with you, do you?
No, it's just more of a test and gauge, get an understanding of who they are. And
it's a process.
Correct. It's a process. And it's like you figure out what is it you like. Whether you're a girl or a guy or any other gender you might identify with, you determine what are the personality traits, what are the characteristics, what are the hobbies, what are the things that you like. And ideally, you're going to find someone who likes a large percentage of what you like. So you have a lot in common. And you'll start dating, you'll go for drinks and dinner and whatever it is you do. And you'll identify who those people are. In business, in setting up an exit, you already set up, okay, well, this is the sort of company. This is the personality of the company, these are the values of the company that we would like to, we think we would be a good target for, right? Okay. And then as you gradually build it, you say, okay, well, who are the candidates for that? And then you go to get to understand who those companies are. And as you get a bit further down the track, you might start some collaborative activities with them, cross-marketing campaigns.
Interesting.
Whatever.
Yeah, okay.
We've done these things before. This is not theoretical. This is actually stuff that's
actually what
works for us.
So collaborative campaigns, so working in joint venture or something along those lines is a possibility before you exit. Is that what you're doing there?
That's one of the things we've done, yeah. So I'll take as an example, we had a transportation business in Berlin. Yes. And we bought a limousine company. And then we bought a trucking company and another couple of limousine companies. We plugged into the whole thing, and we built up a logistics business. And each business in the beginning, we started doing cross-marketing for each other. We started referring clients to each other. We started talking about how we might use collective systems. Of course, we had, unbeknownst to the other companies, we had plans. And the plans were we wanted to acquire you, right? And we wanted them to know that we were playing serious game, and we knew what we were talking about. So we were always taking the lead in terms of suggesting stuff. And I was like, oh yeah, great. Because they were all so busy just trying to run their damn business. Right.
Get it.
So, and the interesting thing was most of these companies were bigger than us. So we became the tail wagging the dog.
You were lining up to acquire them in that instance, did you just say?
Yeah, correct.
Okay. Interesting. I'm learning a lot here, Paul. Keep going.
Yes, instead of growing on your own and trying to take over their market, just absorb them.
Yeah, exactly. It's like I realized the Borg was bigger than the Starship Enterprise, but it was the other way around. So it was literally tail wagging the dog. And people don't expect it, but it's very, very easy to do when you know how. So where's the exit? The third one in minimizing risk is show me the money. And again, it may sound terribly material. It may sound like what's in it for me, but it's not necessarily. It's show me how this thing makes money. How does this idea, how does this product or service make money? How does it, and you can't actually make money, you can only take money, but how is this going to put cash in my wealth account? Because at the end of the day, an investor, irrespective of all the other stuff that they may or may not want to get into, and a business owner, in principle, should have the same approach, irrespective of all the other reasons why they're in business. One of the reasons at the end of it all is to put money into their wealth account so that they can transition out of this into either retirement, or if they're, depending on where they are in their life cycle, or into the next opportunity. Right? So how does this thing make me money? If you don't know how it's going to generate cash flow, that's going to put cash into your wealth account, then why are you...
Why are you in business?
In business,
that way. So in reality, it's in the end, yes, you're delivering value, delivering service, but yeah, it needs to be monetized, and that is the return value, basically.
Correct. Even if you're an NGO, I mean, let's be honest, NGOs need fiat currency to be able to go and do the work that they want to go and do.
That's right.
So that's lifeblood. So what's in it for me? Where's the exit? Show me the money. All these three things for an investor minimize the risk. And quite frankly, they should be the questions that the business owner should be asking themselves when they start a business or when they're looking to take stock of where they are.
Can I go back to your exit? Because I want to get some clarity there. Now, you're talking about acquiring as a part of your exit. That's obviously building your business. But then you mentioned you were potentially partnering, cross-marketing, then acquiring these businesses, but that's obviously growing your business and the value. And then did you have the exit itself, was that selling to somebody else? How did you structure that part of it? Because I didn't quite get that.
Oh yeah, good point. Yeah, good point. So no, indeed, you're absolutely right. So that's you grow. We do a little bit of dating, the collaboration stuff. Then we'd acquire them. We'd assimilate them into our structures, our systems, and under a single brand or under a single banner. And then we'd offer that to the market to a bigger player.
Okay.
Right. So over time, I've been pitched to, and I've pitched. I've been both in terms of investment and in terms of selling. It's the same process.
All right.
So yes,
our exit selling to corporate entities. What's the target there? Where does it sort of land?
When we're in the travel and accommodation industry, one of the things there we built up a series of boutique B&Bs. This is well before Airbnb. We didn't have anywhere near the market value of Airbnb. But we built up a boutique Airbnb thing in South Germany, and we sold that to one of the bigger chains who we knew were looking for a high-end offering for their club clients.
Okay, interesting. And how do you find out this information? Do you get to know them as well?
You get to know them.
Closely with them? Yeah.
When you're in the industry, what you do is you're networking naturally, and you have staff and you have your team. You build up the structure so there can be feedback through the business, and you put out the feelers through the business to find out what people are interested in and what's happening in the marketplace.
So then you're structuring your business for the marketplace to serve and solve problems, basically.
Yeah, correct.
For the buyout, not just the customer.
Future,
very interesting insight there.
Customer, effectively. And then you're growing not through slow growth and trying to take over the market. It's just absorb the other, buy another business or absorb them so you can then take their market share with you.
Correct.
Now, I'm going to ask more questions because I'm very intrigued here. Acquisition strategies, like what sort of approaches did you utilize there in that instance? Was it cash buyouts? How did you generally do that? Because there's a number of acquisition strategies. I'm not going to profess to be an expert in that space, but I'd love to hear some of the different options that you have in this space.
As whenever possible, and a lot of people might say, "Oh, this sounds terrible," right?
Yes.
Whenever possible, we will put the smallest amount of money on the table.
Okay.
Our main strategy was a form of vendor finance. So we put some money on the table and we would buy the asset through the growth that we created. We'd already demonstrated, the interesting thing is through the collaboration, we'd already demonstrated our ability to help them grow their business and help them grow their rev. And so when we come along and say, listen, what we'd like to do is we'd like to bring your business into ours and then grow it together. We'd already proven ourselves.
Yeah, that makes sense because you're helping them sell and grow their revenue already. So that makes perfect sense.
Yeah. And then, of course, if they don't like the idea, it's okay, and it's not, we wouldn't make threats or anything. It's okay. They weren't the only business that we were looking at, and we could go to other businesses and do the same thing because we were going to help other people grow. So it was like, oh, okay. So it's that psychology of the takeaway, right? Like,
yeah.
Oh, you've been helping us
bring your business in. Yeah, get it.
If you take it away from them, they're
we've been helping, we've been collaborating, you guys have been making some good money. Now we want to go and do this. Oh, well, how about we just keep going and doing that? Was sometimes the response. We say, we can do that, but really, what we want to do is we want to grow this asset for a bigger exit, and we'd love you guys to be part of that. If you don't want to be part of that, then there are other companies that we can approach who we've also worked with who would want to be part of that.
So they would get a bit of money down and then ownership in the bigger business. Is that the model?
Yes, they would.
Interesting. So basically you're offering to acquire these businesses, bring them in under the bigger brand, which is obviously your brand, giving them maybe a little bit of buyout plus equity. Is that the model that you're going with here?
Yeah, correct. So, it was very rare that we'd throw, a lot of cash at someone and say, that's it, get out of there.
What would you consider a lot of cash in your world?
All right. Yeah. It depends on the deal. Obviously, I hate to answer that question so vaguely, but it can be, let's say it's a small acquisition of say 10, 15 mil, then we wouldn't go higher than, 6 to 9.
Okay.
And the equity would be based on 5-year value.
Okay. All right. Yeah, there's been talking, that's small. Yeah, they get it. That's fine. But
right,
for some of our listeners, this might be big, but yes. But I think just to bring this down to the context of what we're doing, I think this is why we've got Paul on, is to really get a gauge on if you're going to be in business and want to invest in business. Starting from this position, I think gives a bit of context. Even if you're looking at a lot smaller numbers, it gives you a bit more strategy to start thinking like a business and an investor rather than just a business owner or an employee within your own business. So that's why we're going through this process with Paul. So
be investable.
We'll get back to it.
Now learn the acquisition approach.
Yeah, and just to qualify, mate, and you're absolutely right. So the biggest stuff we ever got involved with had an exit of, the biggest one ever had was an exit of 350 million euros. The smallest. Right, yeah, I mean, they're nice things to talk about, but they don't happen every day. The smaller end of stuff, sometimes we'll do the 250 to 1.5 mil, which is maybe more around the area that some of the people listening to this might be thinking of. Mm-hmm. And the simple thing is this, though. The principles that we're talking about today are the same to you. Yeah, exactly the same. It's just a question of size and scale. If you can do it, Miyamoto Musashi, I believe it was, the Japanese samurai with Book of Five Rings. I think it was him who said that it was either him or Lao Tzu. It was, know how to kill one man, it's know how to kill 10,000. And it's the same principle in business. If you know how to do it for 100,000, you can do it for 100 million.
Mm-hmm. Mm-hmm. It's only an extra few zeros when you think about it, but I think it's just more of a mindset thinking it gets to that scale, really.
Totally. It is. That's where it is 100%. And when you awaken to that new mindset, you will not go back and you will just keep going and going bigger and bigger. But you ask someone who's made 10 million, their next target's 100 million. You ask someone who's made 100 million, the next target is 500 million or $1 billion.
Yes. It's always increasing, isn't it?
Mm-hmm.
Yep.
Before we
always want to grow and expand as people.
Too far away from that. What sort of time scale are we talking about from when you either start this business or acquire one to your exit?
When we were investing, we always had a 3 to 5 year exit plan, and it was majority of the time was 3. So with people in business, unless you really have some deep rooted desire to be in that business generationally, I suggest that a time frame of 3 to 5 years is going to be where it's at, and then look at, and by the 3 year mark, look at where you're going to go next. Even if you have a 5-year plan, by year 3, okay, how am I going to start transitioning out of this? And hopefully you've already documented that and then in advance.
So you'd have a guide of, like, say, first year's work, understand the industry or business you've moved into, start doing your partnerships and collaborations, then 2 to 3, start the discussion about the exit with the new company that you're acquired.
Yeah, correct. So year 1, when we invest in a business, year 1 was bedding down it, getting the systems and structures and everything right, and bedding that down, and starting to have conversations with people about possible collaborations. Year 2 was all about collaboration.
Mm-hmm.
And year 3, we would start to have the conversation about whether we would acquire them or not. And by the end of year 3, we'd be acquiring them. And quite often we would, once we'd done the final acquisitions and assimilated them into the systems and structures, which went pretty darn quick the way we set it all up, we would flip that business to a bigger business. So as soon as we started the acquisition of other businesses into our brand and the growth of that brand, we already had that established enough to be able to go and present it to other partners who would buy us out. So it was sort of a type of round table arbitrage, just over a slightly longer period of time. We were sitting at the table, and we had people on the left who were selling us their business, and we had people on the right who were presenting the bigger picture to.
Mm-hmm.
Get it. Yeah, and it's all about being structured and thinking big picture and having that plan in place, because you can't operate that without a plan. So clearly it's starting it from the beginning.
And anyone who says, "Oh, but I'm too small, I can't do that," I would suggest you need to look inside yourself and do some work there, because you absolutely can.
Interesting.
Absolutely.
Yeah. I think it's good at putting it out there for some people that are starting out and thinking about just building a tech or a tech business, but who are the partners you could collaborate with, not just from a partnership perspective to grow your business, but could you be acquiring them? And in terms of the money that you pay them, I'm sure you could potentially even get finance for that. I'm not sure the structures, but there are different ways you could do this, right?
Yes, absolutely. We had the very fortuitous situation that we didn't need to go and get finance. We sometimes syndicated. If we wanted to spread our risk across a bunch of stuff, we would sometimes syndicate with other people, other high net worths. Yes, you could get finance. I mean, I've started a business off a credit card before. Okay, I haven't like it. I had a $20,000 limit, and I know people have bootstrapped a business off $1,000. But if you're prepared to back yourself and you're prepared to pay 18 to 21% interest on the money, and you think you can grow the business in that time, even if the profits from the business are pretty much decimated by the interest rate for the first year, back yourself in that way.
Go and do it. You got to put your money where your mouth is, especially if you're going to jump into this space, and if you're going to go in. You want to be prepared, and just be prepared for it's the first year or two is some hard yards, but really back yourself and give it a real good go.
Totally. People want to see skin in the game. If you're going to go and ask someone for money, and it doesn't matter if investor or bank, if you're going to ask someone for money, they're going to want to see skin in the game. They're going to see what you've got in there. And guess what? That old concept, but I've got 5 years or 10 years of sweat equity in it. Really? Really? Yeah, we appreciate it. That's why we're looking at you, the time you put in. But what else you got in there?
Yeah, okay. Get it. Yeah, if you put your own money behind it again, that's even more. And it's more conviction to the idea and the product and the business or whatever you might be doing. And it shows that to the investor as well.
Absolutely. And you know what? I mean, I'll be the first to say, anyone listening to this is coming from the context of what I've done. There are other businesses in the industry who have a completely opposite opinion to it than I will, right?
Yeah,
there'll be people who throw money at you.
Yes.
Because they'll be going to the races and taking a bet on number 6, right? Without knowing what number 6 has done in the past.
Like it. Yeah. And that's some investments. They just, they invest in 100 and hope for a few winners, but hope for a few big winners.
My great auntie was a professional punter back in the 40s and 50s. So, So moving on from minimizing risk.
Yes.
That's all.
There's a lot of content there, minimizing risk, and a lot of people to probably take away and soak in, I think. So there's a bit there.
I hope I haven't overloaded too many people because there's still 2 sections to come, and I'll probably have to breeze through them to make it fast.
They can go back and listen to it a few times to understand it properly.
Let's keep digging in.
Okay, so the next one gets really more tangible because all of that stuff we've talked about has been maybe less touchy-feely for people. The next one is about taking money, and I say very specifically taking money, although I use the term making money before. The only people who can make money are the Reserve Bank or the federal, the central bank of your country.
You can print it, yes.
In Australia, the Reserve Bank at the behest of the federal government. So you can only take money and just remove the emotional negativity of the idea of taking money. So taking money is about 3 things, and they all start with S. It's about structures, systems, and scalability. So let's look at structures. There are 2 core structures. One is how do you structure your business? So, and an investor is going to look for a structure which is going to minimize their risk, protect them the most, and have the possibility to earn them more money due to tax relief and all the rest of it. And I suggest to you as a business owner, the money you spend on a good accountant, and I don't say bookkeeper, I mean an accountant who really understands the tax law of your region.
Yes.
Right? Yes. That money is really, really well invested. Right? And you probably want to have a tax lawyer working with a tax accountant. And there are some really good ones in Australia and Sydney, right? Who I know. So get the structure of your company right, and you will do 2 things. One is in terms of yourself, you'll increase your possibility of earning, increase the security by reducing the risk around the business for yourself. And the second thing you'll do is you will possibly make yourself more attractive to people who would want to invest if that situation ever arises because of how you've structured the business. Not only does it give them an entity they say, this is something I can put my money into because it's already all set up. It also shows them that you've actually thought about it and that you haven't just gone down to ASIC, registered a PTY limited, or got your accountant or bookkeeper to do the thing or whatever. You've actually thought about the structure. You've actually thought about because the structure is all about the exit, right? How am I going to get out of this? And how am I going to keep the most amount of money that I can take when I get out? Because
and I think it's well worth talking to some people who know this. And I think you mentioned tax lawyers and some proper accountants. Like you said, there are some accountants as bookkeepers, and they'll do whatever you say, and that's basically it. But yeah, getting advice up front, I'd recommend that too, because the first business I structured was not quite right, but that's okay. Move on. You learn.
Absolutely. So the structure. And then the second area of structure is in how are you going to structure your workforce and your systems and all the rest of it. So a couple of ideas. Are you going to have a flat structure? Are you going to have hierarchy? How are you going to have clusters? Are you going to have groups? What are you going to do? How's reporting going to go? Are you going to be a bricks and mortar thing, or are you going to be remote? And before, 6 months ago, people would be like, I can't work remote. I have to have bricks and mortar. I have to be able to hang my shingles somewhere.
Yeah, so that's changed for our business too. No office anymore, but yeah, it's interesting what you learn when you're forced to.
Yeah, I when I came back to Australia, people they insisted on having a face-to-face coffee. I'm like, dude, really?
Yeah.
I mean, I used to live in the Netherlands, and I'd be having coffee with people in Germany. I don't think I was going to be driving for 2 hours to Düsseldorf from Den Haag just to go and have a coffie. Yep. And the irony is, it could take me an hour to drive to come from where I live in Sydney to the city to just have the same coffee. So
yeah, correct.
I could cross borders of countries in Europe in the same time.
Interesting. Love it.
So how are you going to structure yourself? How are you going to structure your work? How are people going to work? How are they going to report? And there's no right or wrong about it necessarily. It's just give some thought to it, and don't just like, oh, well, we'll just figure it out along the way. Have some thought put into it. They say that the first thing to go out the window is a business plan, and it's absolutely true. Nonetheless, have some framework around which you are going to use. I love randomness. I love dynamic in business. And in order to be able to be random and fluid and dynamic, you need to have a structure under you on which you can always lean back on.
I think it's a great point, because you can be random and fluid, but if there's no structure underpinning it, it can go all over the place, and there's no direction then.
Yeah. And I think there are more and more people out there who just love to be, random and ad hoc. Find someone, if you're not the structured person, find someone who you either employ or you partner with who is. And then if you partner with them, don't get annoyed as hell with them when they put structure towards you. And if you employ them,
people, yes.
Yeah, totally right. And if you employ them, don't get ticked off by them. You're employing them for a reason.
For that reason.
Exactly.
Add that value, right?
Absolutely. So structure. Second one is systems. Systems come from hospitality, and hospitality it's possibly one of the hardest things to systemize because it's so human based. Real hospitality, whether it's restaurants, bars, hotels, or whatever, you need that human for we Homo sapiens to have the feelings we want to have when we engage in something like a good night out or going away on a holiday or even on a business trip. There is that touchy-feely thing that we want. And in hospitality, if you don't get it have a bad experience, it's like, oh my God, really? And it's a hard thing to systemize, because systemization is not just technology, it's also people. And the trouble is, when you systemize things, you run the risk of making things too clinical and
taking that personality out of it, right? So
correct.
Yeah. Especially hospitality, that industry there. Yeah, you want the personality in it.
Yeah, there's a process to wait a table and take an order and deliver that to the kitchen. But you don't want them to be robots.
Walk around like a robot. Yeah.
Yeah. And now take that, and I don't really mind which business anyone's in, take that, and how do I apply that in my business? And I'll go to the under end, possibly the under end of the scale. And I don't want to sound like I'm picking on accountants today, but because I'm not. Accountants, we tend to think of accountants as these dry, and lawyers, right? We tend to think of them as these dry professionals, right?
Yes.
Who really don't inspire us, but we love what they do when they do it really well. Right? And that's
very true.
Very true.
So when you speak to your accountant, he saves you a bit of money at tax time because he's picked something up. Yep, that's brilliant. But we don't care about the personal touch. It's more about the result sometimes.
How would it be, I'll give you an example. How would it be if you walk into an accountant's office and instead of there being a receptionist there's this cardboard cutout which says, welcome, someone will be with you. We're glad you're here. Someone will be with you in 6.7 seconds. And you're like, yeah, really?
Too much personality for an accountant, yeah.
And you look at your watch, and within 6.7 seconds, someone's come from the back office, they're out the front. They say, oh, and they find out what you're there for. And, oh, yes, okay, well, I'll let Mr. or Mrs. So-and-so know that you're here. In the meantime, can we get you something to drink? Here's our menu, right? And then they give you a menu.
Interesting.
And, by the way, would you like to do, if you need to do some email on your, or charge your phone, or, or you need to send a letter, or you want to send whatever, or print something, all our facilities are here. There are instructions on how to connect, but if you need any help, we'd be more than happy to help you get that connected while you wait. All right. Now, you wouldn't expect that.
Service does not exist in that accounting practice, no.
It actually does, because that example is something I'm giving you.
Wow. I haven't seen that before, but anyway, obviously you have.
It's a very exceptional.
No, clearly not the same accountants, no.
Or take a lawyer who doesn't charge you by the minute, but charges you based on value. And, like instead of saying, okay, every time I'm on the toilet reading your file, I'm going to bill you in 6-minute increments, they agree up front how much it's going to cost, and you agree to the cost, and that's locked in, as an example.
That's a nice approach.
So systems come down to people as well as technology. And the idea of systems for me are two things. One is to provide a consistent quality experience for both the client and the employee. And two, to free up the employee from doing mundane tasks, not so that they can be made redundant, but so that they can go off and do things in the business that really resonate with them, that they're passionate about, and which they can excel in, and that you as the business owner can leverage to the benefit of the business based on shared values. So
love it.
That's what systems do in my world.
It's a great way to frame that, because some people might have the context of systems are just a dry thing, but the result is what you're focusing on there. And they're great results for both parties involved, and employees are a massive part of a business and culture, and they have to also want to be served and be able to grow. So I think that's a really good framing of what a system can do.
And without them in place, I'm pretty sure the third point isn't possible.
Mm-hmm. Yeah, and you're absolutely right. And just briefly on what I said there is, like, a lot of people want in their business, they want their staff to give their customers and their prospect these awesome experience. They want the customers to have a great experience, yet they don't really give a damn how their employees experience it themselves. And if you adopt that approach, and we're going to get that into the making it happen shortly,
yes,
then you're really setting yourself up for failure. But yes, you're right. That last one comes into scalability. If you don't have a structure, you don't have the systems, you don't have a machine which is going to deliver awesome experiences to people, irrespective of whether it's a product or service, and continually do that consistently. You go to a restaurant, you have a steak 1 week, it's perfectly cooked. You go back the next week, you want that same steak perfectly cooked again, don't you?
Yeah, correct. Yeah. Consistency is important in anything,
right?
And we expect it. We expect consistency as human beings. We like to be comfortable and know what we're getting ourselves into.
Yeah, and scalability is, again, all about, or rests upon the ability to provide a consistent service and a consistent quality of experience to your prospects and to your clients and to your staff. Scaling is going to be the one thing that is going to help you break away from the chains that bind you to your regional area. Before this whole COVID thing, people would be like, oh, my niche is North Sydney or, wherever. Let's just talk about Australia or Sydney. People will be talking about, oh, my niche is this local area. And now suddenly they've been forced into a situation where they can't work in the local area. They have to work online. And, oh, my God, there's actually this world out there.
It's opened up a few things for a lot of people, I would say. Yes.
Would you say with the scalability or the structure side, which point is the one where you would sort of step back so you can have structures without you in place, or so you can scale without you in place?
Sorry, can you just repeat that?
So with the scalability or the structures, at one of these points, you'll have to take a step back and the business should be able to run on its own like a well-oiled machine.
Correct. Yeah.
And which one would you say that would happen at most?
Systems. You're not from, again, my experience, you're not going to get the scalability unless you are able to remove yourself from the equation.
Yep.
Yeah. Okay. Agree. Yeah.
Scaling with you at the helm, Lord Nelson couldn't be on every ship, but he was on every ship because of who he was and, how he was and what he'd set up in terms of the systems, right?
Okay. Yeah, because that'll be something important for the listeners at the smaller size of the business where they generally run everything. It's understanding that you can make a structure and take yourself out of it and have it still run. You don't have to worry, what are the kids doing at home when I'm not there?
Yeah,
with that type of mentality.
Absolutely right. Oh, absolutely right. And actually, you raise a really good point just with regard to structure, because you say, they tend to do everything. Here's a common mistake I find most small business owners make. They don't create a distinction between the different roles in the business because they are the owner. So they're the shareholder. They are the director. Yes. They are the manager. And they're also the janitor or any other level of employee they want to be, right?
Yeah, they wear all the hats, basically.
They're wearing every hat. And they never take one off and put another on. They always have all four on, and the one which is quite often is most dominant is that of the employee. And that's why people end up working so-called in your business, right? Because they wear the employee hat most of the time. You need to create that distinction for yourself that you are an owner. An owner has a certain role. A shareholder has a certain role. A director has another role. An manager has another role, and an employee has another role. And it can be very difficult, unless you've got a split personality or you're a multi-potentialite, to be able to put walls between the two. Nonetheless, you have to do that. The faster you learn to do that, the faster you're going to be able to bring other people into your business. Imagine that you're doing it all on your own and you bring someone else in. And I'm sure there are people listening to this who've done that before. They bring someone into the business and they find it really challenging to delegate. Yeah, because they've never compartmentalized for themselves what it is they do. Everything they do is a blur across all of these different roles and tasks. They've never segmented out what it is they do in each of their roles. So they find it very challenging to delegate to other people.
I think what you said there, everything's a blur. I think that's a really interesting point, because you can go from one hat to the other and you don't realize that you're jumping from one process to another when you're a small business. So I think that's a really interesting point that you raised there from a blur perspective.
Yeah, I see it all the time. And quite frankly, I went through it myself at one stage when I was, I don't think we have enough time to even talk about that, but
I've been through this myself too. And I think it's taken us time in our business to break roles down and what the requirements are, and even defining what hats are and working in particular roles. It can be challenging if you don't stop and take a step back, and I think we've been doing a bit of this in different facets and opening up different angles of our business of recent. So it's been, Anthony can attest to that, from a marketing hat, that's all right, but he's defining processes around that and how do you scale it. And I think you need to do that, otherwise you get stuck and you can't go anywhere.
Absolutely. And systems are bottom line. It was a great question. Thank you, Anthony, because systems are the bottom line key to exiting, to removing yourself from the business. There are different levels of exit, by the way. You don't have to give away the whole dog and pony show. You remove yourself operationally, you remove yourself from the board level, and you remain financially, or you remove yourself completely. There are different levels. But the first thing is you have to remove yourself from that operational work floor. You have to elevate yourself above it, and you're not going to do that unless there is something in place, and that doesn't mean more people necessarily. There's not something in place which will A, deliver the consistent quality of the experience, and B, give you the ability in your higher elevated position within the business to see how it's running, keep that helicopter view, and grow and expand it from there.
Yeah, because you're selling the business, you're not selling yourself at that point.
Correct.
Yeah.
The business isn't worth anything if it requires you, is it?
No. So even if there are people listening who are in a consulting sort of role, you can say, but the business is me. I'm the consultant. You can structure that differently, that your IP, what you teach, how you teach it, and all the rest of it, how you consult, can be taught to others, and you can elevate yourself out in that business, and you can exit that business and still retain a portion of it. There are enough companies out there for which there is a precedent for that. And there are enough companies out there, big ones, who buy boutique consulting companies.
Yeah, that's very interesting insight into how you focus on systems and structures. I think that's been good for all our listeners just to think about putting them in place. So any business that you're building, if it's tech or whatever it might be, there are all these other things that exist. So when we talk to people a lot, it's all right, let's build the tech and people will come, but that's not the way business works. You still need systems, you still need people to operate, manage, support. All these other things have to come into play, otherwise you can't scale and grow.
Yeah, 100%. So the last area is making it happen, making the magic happen. And this is all about people. So the three areas of making it happen, who'll do it, who's it for, and who says that, is who's on the team, who's your niche. A lot of people call that the target market. Personally, I don't know anyone who likes to walk around with a target on their back, but nonetheless.
Like it.
So who's on the team and who's your niche and where's the traction? And again, all three are about people. So obviously team. I mentioned at the very beginning about hiring based on values and not skills. And to this day, I still do that. You can teach someone something. We recently, in one of the business I'm involved with, we recently hired someone for the back end systems, and the person didn't have all of the skills that we wanted, but they did have the right attitude, and they shared values with us, and they had a lot of passion. We're like, done, too easy, right?
Yeah, value and passion is teachable. Yeah, when you've got someone that doesn't have energy or get up and go, they're very difficult to teach.
Yeah, absolutely. And there were candidates who had more skills than this one did. So, but they got the job. So who's on the team? And so values and skills is one side of it. The other side is, even if you're a 1-man band or a 3-man or a 5-man, woman, whatever, but if you're a 1-person company or a 5-person company or whatever, put together your imaginary board. Project yourself 3 years down the track when you're getting to a point where you might be exiting or looking to exit, maybe start the exit process. And who is your board? Who's on your board then? Firstly, what are the positions? And a board is been pretty well defined. So the types of roles you'll need generically are already out there in the marketplace. And now, who are the people that would be a really good fit? And again, based on the values and that you share with them. It's sort of like putting that mastermind from. Have you ever read Napoleon Hill, Think and Grow Rich, where you put that mastermind together?
Yes.
Yeah.
So building that in your imagination, or is it building it with people you know, or who you imagine the type of person would be?
I start by imagining the personality and the values.
Okay, get it.
And then start looking, like with the exit strategy, looking around for who would fill that in. Yeah. So who's out there and who would be attracted to this? And you might, because when you do it on that basis, as opposed to a paycheck, it's really interesting to see who can be attracted to your venture. People may not believe it until they actually go through this themselves. When you define the future board of your business, whether it's going to be in a year or 3 years or whatever, and you firstly define it based on personality and values, and then you start looking around at who has shared interests and shared values and what sort of personality they are, and you start putting some names onto those seats, and you literally draw a diagram and hang it up. We'd always hang a board table on the wall with the seats, and then we'd start putting names in there.
Interesting.
And
I love it. Yeah.
And it's quite interesting who suddenly gets attracted to your business. I'm not suggesting anything ethereal or whatever here. It's just purely you start putting something out there, and you find that people find your business something they want to be involved with, and people that you might think would be outside your budget, and they probably are outside your budget if they just wanted to purely do it for cash.
Yeah, I get it. But that's not the only option in this space, is it?
It's not, because again, it comes back to what's in it for me, and what's in it for me is not just cash. It might be what it says. The bigger question is, what does being involved in this business, whether it's in the what's in it for me stage or, who's going to be on my team, it might be about what does it say about me as a person. That's why they might want to get involved. If you're a female only business and you're out there fighting for women's rights or whatever, just to choose that niche, that might be something that a certain type of person really resonates with.
Get it.
So look at who's going to be on, and then that's the board level, and then look at the other areas in the business. I don't want to denigrate anybody. It's the lower areas creates a picture of echelons and hierarchy, which I like to avoid. But you know what I mean by
I get you. Yes.
The less senior roles in the business, they will fill themselves in based on the values later on. But you need to have that structure where you were working with people on a day-to-day basis, that they are going to help you drive this business to the commercial success you want to have, whether that's through investment or just growing the business, right? So who's going to be on your team? Great question to ask, and an equally great question to answer early on.
Seems like you forward think everything, Paul. Everything.
Absolutely.
Just through this process, and it's all 3 to 5 years ahead, and even down to the team and the personalities you need in the business. So yeah, very interesting.
I guess a lot of people don't really, people don't really do that. And again, same thing for the niche. How many companies do when you have a conversation with someone, whether at a networking event, at a pub or in a cafe, and you say, okay, great. Really love talking to you. Love what I hear about you online. Tell me, how can I refer people to you? What's really your niche at the moment? What's your avatar? Or depending on how you want to put it, whether you have a demo, whether you go down the demographic route, whether you go down the personality route, what's the basic avatar? And the number of people who cannot give you a straight answer and waffle on is crazy.
I think the realization for us, and for me anyway, in business is we started a business in pharmacy and we purposely picked the niche because I said, all right, let's target this specific area. It's an area we're working in, and let's not go anywhere else, and let's serve them. And the amount of opportunity opens up by picking a niche, I think people get scared about it. And the amount of opportunity, other things that evolve just within that target market, you get to understand them, you get to know them, their thinking, their ins and outs, what the challenges are in industry. It's so much power in terms of delivering to a niche.
Yeah. And I always smile when someone says, yes, but our product or our service is suited to everybody.
Everybody, yeah.
I'm sorry.
Heard that before.
Even the Catholic, even the Catholic Church doesn't have 100% of the religion market. Right? No
Correct.
church does. So obviously it doesn't suit everybody. Not that you complain if you had the number of followers that any of the major league churches have, but your niche is your ability to define very clearly who you are adding value to. Now imagine, just again, to put this back for a moment in the perspective of talking to an investor, and now you be the investor. You're pitching yourself about this business, and you say, hey, who's going to buy this stuff? Who wants this stuff? And the person in front of you starts to hum and ha and not really have a direct answer, but tries to talk around it. And instead of giving you a 30-second succinct description, which you can then question and they would embellish upon, they occupy the next 5 minutes of your life that you'll never get back, telling you nothing.
Going around in circles, basically. Yes.
Yeah.
Get that. Yep.
I know I don't endear myself to a lot of people by the way I speak, but, it's
telling it straight, and I think it's brilliant the way you present it, because it's straight and to the point, and there's a lot of clarity around this if you really dig into this content. And there's like a fire hose going off at the moment. There's so much content here and so much gold, and I think people need to listen to this episode a couple of times just to get their head around what you're trying to say here. But it is all about structures, thinking it all through, really getting down into the detail. And I'm sure market research comes into this significantly, especially at the start.
It does. Bottom line is this. I talked about large numbers before, but let's say you're an investor. Let's say that even on a small scale, even on 10 grand, someone comes to you and you're going to be syndicating with a whole bunch of people to put a total of 100K or 150K or 250K into a business. And your contribution is 10 grand or 25 grand, whatever you can either have in the bank, can drag out of your super or drag out of your credit card because you think this is a really good opportunity. Mm-hmm. What critical questions are you going to ask, removing all the emotion from how much you might love this business? What critical questions are you going to ask? And you're going to be asking the same questions I'm talking about now and a lot more. And, we got a due diligence list goes, a mile long, but you're going to ask those critical questions. So why are you not asking those critical questions of your own business?
And therein lies the flaw with many business people that walk into business, because I think they fall in love with the concept of being a business owner. And I think I did early days. It's like when you start, like, good business, let's run this. But when you really dig in, I think what you're saying here is just puts people back, and just before you're jumping in, think of yourself as an investor, not a business owner or an employee within that business, or however you want to sit it. You're investing time, money, effort, sweat equity, whatever it is. So technically you are an investor, and maybe the first one within the business. So yeah, we should be answering these questions to ourselves before we just get sold on an idea or a dream.
Yeah, spot on. You're absolutely spot on, because you are an investor. Just imagine that you're going to start a business, and let's say that your earning capability is anywhere from 150 to 300K a year, right?
Yes.
Let's just say that if you were to go into corporate, that would be, with OTE or whatever and other bonuses that maybe even more. I'm just trying to pick a middle road here, right?
Mm-hmm, mm-hmm.
So you're going to go into business, and in corporate you could do that. You could work 9 to 5, grab a paycheck, go home, do your tax return at the end of the year, be happy, have your weekends to yourself. Mm-hmm. And now you're going to go into business, and you're not going to have that same lifestyle, because why?
Clearly you want to be setting yourself up for a bigger outcome or a bigger purpose that you're trying to serve and solve and problem. And the why comes into that, I would say.
Absolutely, right? So I'm not saying from the beginning you need to to replace that income 1-to-1. And indeed,
it's probably impossible from the beginning unless you've got this massive amount of funding and you start selling. Like even in terms of you get investment, you can't use that to replace a paycheck. It doesn't work that way. I think a lot of people think that I'll get $500,000 investment and I'll use that to pay myself $250 per annum. No.
Exactly. That's a good point. And thank you for raising that, because that's just one of those things that comes up all the time.
It comes up in my world too. It's like, what are you talking about? Investor's not going to give you money to pay yourself. Forget about it.
You'd like $1 million.
Yeah. Yes.
Yeah, you'd like $1 million so that we can firstly pay off that director's loan, and then don't think so.
Yes. Yeah, correct.
So last one. So we had who's on the team, who's the niche, and where's the traction? So traction can be a number of things. As I said in the beginning, one of the things I say to people all the time is, hey, you want funding, you're looking for $100,000, $200,000, you'd probably settle for $50,000 if I gave it to you. Why don't you just go and sell yourself out of your funding issues? That's one. So traction can be sales. It can be not just volume. It's not necessarily volume of sales, because you may be selling high ticket items, and making one sale of $50,000 does not give you traction. Selling 1,000 at $5 is actually more traction than one at $50,000.
I like that. Yeah, that's very interesting, because you got 1,000 people that say this is good, not just one.
Yeah. I should have said $50. Sorry. I'm usually good with numbers, but yeah. I've got the point. Because you got 1,000. Yeah. So now you got a database of 1,000 people who've already bought from you at some level. You can go and sell them the next thing and the next thing and the next thing. So traction can be sales. It can be loyal community. It can be social media following, provided they're engaged and provided you have a way of demonstrating that engagement. It can be your analytics on your website. And I don't just mean Google Analytics. I mean analytics which shows people taking a journey through your website, how they go through, so you can demonstrate the marketing you're putting out there is actually having an effect, because it's driving that. You have a theory about how you want to drive people through, and then the analytics demonstrates that your theories are correct. It can be the people you attract to your advisory board. It could be investment that's been put in, which is not through the so-called 3 Fs, right?
Yes.
Which are family, friends, and
what's the last one?
The kind way of saying it is fools. What was that? Sorry?
I missed you. You dropped out for a touch there.
Oh, sorry. I said, family, friends, and the kind way of saying it is fools.
Mm-hmm.
There's a less kind way of saying it, which I won't repeat right now.
Yes.
But
that's fine. I get it. Yeah.
But you can't count the 3 Fs as investment to demonstrate traction or anything really, because they're putting money into you because they love you. The contradiction to that is if you go and do a crowdfunding campaign, where you have a high volume of people actually buying into it, that creates traction in 2 ways, depending upon whether it's a marketing crowdfunding or an equity crowdfunding basis. People are investing their money in the business, or they're buying the products. So another way of getting traction is, or demonstrating traction, I should say, is your reputation in the marketplace, whether it's through the media, whether it's through reviews, all those sorts of things. So when you're talking to an investor, these are the things they'd be looking at. And again, how you're the business owner, how do you measure whether you're actually getting traction? What is traction? Rubber hits the road. You're getting grip and moving forward more rapidly. These are the things that will help you get forward faster.
So putting a system around measuring traction is also something I would imagine that you do.
Absolutely, yeah. If you can't measure it, you can't really demonstrate it, apart from, point to some big numbers. But it's great to point to some numbers. It's even better to point to the numbers and say, this is how we arrived at it.
Yes.
Because the message you're sending to an investor is, I really know my stuff and I've really thought about it. And if you know your stuff and you really thought about it and you can demonstrate it to an investor, wow, imagine what you can do in your own mind.
Yeah, then it's evidence-based.
Yes. In terms of when we sell ourselves, there's more power too.
Yeah. I mean, ultimately, you're sitting there on the kitchen, the dining room table on a Friday afternoon, about to have dinner or whatever, and you're thinking, business really working? There's money in the bank and all the rest of it. And there'll be the different groups. There'll be the groups that sit there and think, I don't really know. I can see money in the bank, and we tick over, and I've got some employees, and they build themselves up that way, and they may be correct. They may be completely deluding themselves, or they may be correct. And then there are the people who have their stuff together, and they're like, wow, I've got a fantastic business. Like, I'm sitting here, I'm looking at the revenue. Yeah, okay, we can do more, but I know how we can do more. I can see that the last campaign we did, we got X percent conversion rate. We converted a whole bunch of new clients. We upgraded a whole bunch of old clients. Our spend was whatever it was, and the cost of acquiring new business was 20%, 30%, whatever it was. They know their numbers, right? They know their numbers. Every business can be brought down, in my opinion. There are multiple ways of doing it. One way of defining what a business is outside of why and purpose and soul and all that sort of good stuff is numbers. They don't lie. Yes. They really don't lie. And every business is simply a bunch of processes put together, executed really, really well. And what we're doing in business is we're creating, irrespective of whether you're selling a product or a service, what we're doing in every business is we're creating experiences. Throw any business at me, I'll tell you how it creates an experience or how it should be creating an experience. And that's where it matters, because people don't care. And this is the bottom line of the whole thing. You can have a really big why, and I believe personally it's great to have a why. I won't say it's essential, but I believe it's great to have a why in business, a purpose. There are enough businesses out there who are void of purpose and void of why, yet they make money. So it's not necessary. But I do find it a good thing to have. People won't like me for saying this, but quite frankly, what you do, no one gives a rat's about. There are.
It's not about you, is it? No, when I go and buy something, it's more about me. Let's be honest.
Yeah, it's totally right. And there are a million other people out there who do what you do. And maybe not a million, but there are a bloody lot of people out there.
Oh, there's competition everywhere. Mm-hmm. Just be willing to look and you'll find plenty of it.
Yeah. And as soon as you think you've had an original idea, Google it and see that 10,000 other people had it before you.
Yeah.
Correct.
It's never original.
No. Yeah, exactly.
Execution is all that counts. And I think you've told us what we really need to be focusing here on.
Yeah. So you've got why and you've got what. And what's in the middle is how. We are Homo sapiens species. We are human beings, and life is nothing more than a process of experiences. That is, and again, sorry, touchy-feely gone, bring it down to some really clinical stuff. That is what life is. It's a process of experiences. How you do what you do is all about the experience. It's what keeps people coming back. Why you do what you do, that'll bring people to the door. Be like, my gosh, they're a really cool company. They care about this. They care about that. It may get them to the first transaction. It may not. It'll certainly get them to the door. Buy whatever widget that every other person down the street sells as well. How you go about selling them, how you go about engaging with them, that is what is going to create an experience. That is what is going to keep them coming, spending more often, and telling other people to do the same thing with you. How you do what you do. People talk about CRM, the customer relationship management. I've been around CRM since year dot. We've abolished the concept of customer relationship management in any of our businesses because it's not about managing. For us, it's not about managing a relationship. We find that quite arrogant. For us, again, I'm not endearing myself to a certain sector of the industry, but for us, every interaction you have with prospect or a client, whether it's an email, whether it's a face-to-face, whether it's a phone call, whether it's a chat or whatever it is, social, every interaction you have is another opportunity for you to recreate your relationship. So you are in the business of, in that context, in the business of constantly recreating the relationship. It's sort of like a restaurant is only as good as its last meal, and a rock or pop star is only as good as their last song. The next song comes out. Yeah, I didn't like that one. Okay, I'm off to find the next and best artist to listen to. Didn't like that last steak. Oh, there's a new steak restaurant down the road. Let's give them a try next time, as opposed to being dedicated to going back there. There was an Italian restaurant in Den Haag when I was living there. They made the most phenomenal fresh pasta with foie gras, carpaccio, truffle sauce. No one else did it. And I would always go back. And to the day that they closed shop, they always made it phenomenal. And I would tell everyone about it.
So that always recreating that experience and that relationship. So I think I've been, Paul, I've got so much content out of this, and I think I've learned a lot just sitting back listening to you. Clearly a lot of experience behind you, and I think, I'll take quite a bit away from this conversation, and I'm sure all our listeners will.
Definitely.
In terms of who you are and just the way you structure a business and the way you think about it is quite simplistic, but there's obviously a lot there. There's a lot of detail behind it and a lot of thinking and brain power put in it to get you to a point of even beginning. And I think today's conversation was around setting up a business to, basically exit, and just to give a few tips to the people at home that are listening to this, that are maybe in a business that is operating, or maybe in an idea stage where they're looking to build some tech or doing something in that particular realm. How long would you dedicate to going through these 9 points, working on these before you even put any investment into a business? What would you generally do?
Do you mean us as an entity or a person who's listening to this for their own business?
Either way, if I'm listening to this, just let's start at the person listening to this that's non-tech founder, ready to put some equity into a business or put some time into it. What should they be doing? Because this is all prep work. It's all my pre-thinking. How long should I be investing in pre-thinking around a business?
The short answer is 1 day is enough to get all of this on. If you dedicate 1 day without distraction of anything, you can get a blueprint on a page, which is enough to start you going. And then you just fill it in as you go. And I'll give you...
Iterate.
Yeah, correct. It is a sequence of iterations. It's sort of like before that CRM we were talking about came about, I would have a 20-page document that I had all these questions on, printed out, and in a lever arch file. And when I met people, I would write what I knew about them. And as I grew to know them more through whatever means, I'd add to that. So I didn't need to know the full picture first before I would start interacting with them. And it's the same here. Get your initial thoughts out, and on a paper, don't just sort of think about them, because you're not going to hold them in your head. Get them onto paper. That's a fair
point, yeah. Get them onto paper. Get them out. I think that's a fair point, because you can think about things and they get lost if you don't get them down on paper.
Yeah, totally. So as a minimum pixels on a screen, in the initial brainstorming though, I'd really suggest to people to use a pen and a piece of paper and just mind map on a piece of paper before you put into pixels on a screen. There's this thing that happens between writing something or drawing something and in the brain in terms of memory and creativity and development of ideas that you don't get when you're just typing. At some point, put it into a document on a computer, and then again, like you were saying, iterate, and refine as you go. But don't procrastinate. Perfectionism is procrastination. You are not.
Love that.
You will not get it perfect. I do not care who you are. You will not get it perfect.
Oh, there's no such thing as perfect, is there? And in business, like you said, I think during this conversation, it's going to evolve, and you need to be fluid enough to be able to evolve. And having this blueprint, needs to evolve with you too.
Yeah. I mean, Burger King or Hungry Jack's or McDonald's don't make the best hamburger, but they have a system, and they start out. Yeah. Qantas.
You know, it every single time you go there.
Yeah, exactly. Anyway, pick a business. They're not the best in what they do. They're just really good. Yeah. And they're good enough. It has to be good enough to start, and just start. I'd rather see people starting and like you were saying, iterating on it. And then rather than sitting back and saying, oh, well, I've got to get this bit right. I haven't worked that bit out.
Yes.
No, you don't. Get these 9 points down.
Yep.
I'll give you a real simple way to ask these questions of yourself and get it sort of solidified. It was taught to me by an Aussie back in Düsseldorf, in Düsseldorf back in the 80s. And the technique is real simple. You ask the question, you answer the question, and then you question the answer. And you write this down. You don't type this on the screen. You write it on a piece of paper, right? You can do it on the screen, but it's not as effective as we said. You ask the question, you answer the question, you question the answer. And you keep doing that until the answer you see on the page in front of you does not want to make you cringe or puke.
Love it.
Right? And what I mean by that is it resonates and you feel like, that you're connected with it, as opposed to, when you're faking it.
It's not from mind. It's from deep within. It's saying, it's not just your head. It's not the brain. It's like coming maybe a bit from heart, if I would say it from that perspective.
And what's in it for me? So answer the question. Where's the exit? And you might reach a block and say, I just don't know anymore.
Okay.
Here, if you don't know anymore, think of something crazy. Think of something so for your context crazy.
Yes.
And just put that on paper as an initial thing. You might end up discarding it later on. Okay. And at some point you want to obviously stop. But spend a day, take a 9-hour day, 1 hour on each, and you'll get the answers and you'll have something phenomenal to start with.
Paul, this has been very insightful. And I know a lot of our listeners will get a hell of a lot out of this if they're willing to invest the time. And you've only said 9 hours there to begin with. And that was a lot less than I thought you were going to say. So, that's pretty cool to see your perspective on it and just getting moving and getting starting and getting into action. So really appreciate you coming on the DevReady podcast. It's been a very different podcast for us, looking really deep within business structures from the perspective of an investor, a long-term business person that's been doing this for a hell of a long time in all different categories. So really appreciate your time, Paul. And how can people reach out? Because I know you do some mentoring and bits and pieces in this space. If anyone wants to get to know Paul and deep dive within their business with you, how might they do that?
Either via my website, so Paul Lange, lange.com.au, or go on to LinkedIn. Pretty much on most social profiles, you'll find me /Paul J Lange, PaulJlange. So whether it's Facebook, LinkedIn, Twitter, Instagram, that's
all the same.
I've dominated that namespace. So I'm pretty responsible to all those. The website's the easiest, or just info@paullange.com.au if you want to send me a direct email.
Paul, absolute pleasure. Really appreciate once again sharing your domain knowledge and definitely helping even my perspective. I learned a lot today, so I really appreciate it.
Thank you both for having me on. Thank you. Thanks for having me on. It was an absolute pleasure.
Oh, thanks a lot.